So thank you for joining us today, where we will share with you the results from our survey of accounting and finance employers and hiring managers across Canada. Your presenter today will be Andy Robling, Vice President of Client Development at Hays Canada. Andy has worked for Hays for almost 25 years, 3 here in Toronto. Thanks, Andy.
Thanks, Clayton, and thanks everyone for being here. I'm also joined by Thea Watson, our VP of Marketing, who did the research and created the report, as well as Alex Bethwaite and Shovik Data from our accounting and finance team, and they'll be helping us with the Q&A following the webinar. We'll have you for approximately half an hour to share the results of the survey, and we've also left 10 minutes in for questions. If you want to send the questions in as we go along, and we'll cover as many as possible. Just a little bit about the survey before we start. As most of you know, we produce an annual salary guide which shows typical salaries paid across a selection of industries and functional areas, cross-reference for level of experience and type of company the role may be found in. The salaries are based on what we see every day in the roles we fill and from the candidates we meet. It's become an invaluable reference tool for literally thousands of hiring managers across the country, and we're very proud of its simplicity and user-friendliness. To request a copy of the 2016 guide, go to hays.ca/salary guide. In addition to the guide, we also survey our clients about their hiring plans, salary changes, business activity forecasts, and their confidence in the economy. This year, we've included 5 years of data to show trends in the job market, and this puts us in a position to see things that others can't and allows us to provide valuable advice and recommendation to our clients. Today's webinar is specifically about the accounting and finance market in Canada, with some slides about the overall trends we're seeing as well. This year, the survey was completed by 3,500 hiring managers, HR professionals, and business leaders across the country. We have almost 700 accounting and finance hiring managers who responded, and overall, we covered 16 industry sectors and 20 functional areas. And I'm going to pull out regional and industry differences and variances as we go along for the sake of comparison. So I'm going to start with the headlines. Firstly, corporate Canada's confidence in economic stability is becoming more conservative than in previous years. Despite market concerns, principally around Alberta, business activity forecasts do remain consistent with previous years. Employers are increasing salaries at a slow rate. However, they are willing to increase salaries to attract talent in specific areas. There's an increasing awareness of how important company profile is in recruiting, and company awareness is becoming a challenge when recruiting. And also succession planning is no longer a nice to have, but really has to be on companies' to-do lists. When we look at what accountancy and finance hiring managers are telling us, the expectations of the economy are that it's going to be stable, pretty much in line with last year's expected growth. Business activity, accounting and finance hiring managers expected to be comparable with the overall market. Salary increases are likely to be conservative, but again, we see employers who will use competitive compensation to attract talent. And again, hiring plans remain steady for 2016. In terms of the market outlook, we have varying degrees of confidence. We'll start with feelings about the economy in general and whether people believe it will strengthen, weaken, or remain the same. And last year, we saw the positives outweigh the neutrals for the first time in years, with up to 50% of our respondents seeing the economic outlook strengthening. This year, it's flipped back again, and by a margin that's greater any time than in the last 4 years. We've got 50% who believe the economy will remain static in 2016, and around the same proportion believe it will improve, as there are that believe it will weaken, around about the mid-20%. So why the change? Well, the headline for the Canadian economy in the last 12 months has really got to be all about the price of oil. When we conducted the survey last year, the price of a barrel of oil was still over $60, and we hadn't seen a change in confidence. Now, at around $40 a barrel, it's a different story. How much of an influence is oil price, and how much influence is the Alberta economy having on the overall story? Well, we'll have a look at that in a minute, but first of all, we're going to look at the accounting and finance results. Looking at the same question, but as I said, only for accounting and finance hiring managers, you can see a fairly similar sentiment from these respondents. In fact, these results are all within 5 percentage points of the cross-functional results. So let's look at what's driving this shift. We'll look at the same question, but we've broken the results down into BC, Alberta, and Ontario, and you can see quite a marked difference between them. If we start at the bottom with Alberta, what was previously the most confident province has now become the least. In 2015, we had 60% of respondents believing that the economy would strengthen in the coming year, and that's now dropped to around 15%. We've got 50% in Alberta now believing, or perhaps we should think are only hoping, that the economy will remain static for the next 12 months. But a very significant number, around 40%, believe things will be getting worse for the Canadian economy in the coming year. If we now go to BC and Ontario, go to BC at the top, a very different story, with 35% believing the economy will strengthen and only 15% saying that it will get worse. Ontario, pretty similar, with 30% saying it will improve and 15% saying it will get worse. So despite the fact that our question is about the economy overall, not your own province, confidence levels are clearly affected by what's happening locally. So how about what's happening with business activity levels? I'm just going to explain this slide. The shaded areas are what the expectation was for that year, and the solid colour lines are what actually happened that year. We've got a couple more slides like this to follow, which are designed in the same way. And there are two clear highlights from this slide. Despite the fact that confidence in the general economy has dropped, we can see that the majority of employers, around 60%, believe that business activity levels will improve in the coming year. In other words, the economy isn't great, but will be fine. Secondly, if you look at 2015, you'll see that around 70% of people said they expected to see business activity levels increase. But in reality, less than 50% actually saw that come to fruition. Generally speaking, there are fewer companies experiencing growth than started expecting to, but that makes sense as people are optimistic. The thing about 2015, though, was the size of the difference. We had a 20% drop, where usually we only have around about 5%. So what does that mean for 2016? Well, we have 60% saying they expect improvements. So let's see next year whether the reality is 55%, which would be that 5-point drop, or a more worrying 40%, which would obviously be a 20-point gap like we had in 2015. Looking at accounting and finance hiring managers, again, employers are definitely more cautious, with about a quarter expecting business activity drop. But you can see overall that there is still a lot of optimism in the market, with more than half expecting an increase in activity. Looking again at the regional trends, and I'll start with BC, you've got a pretty positive overall picture. 55% saw increases last year, and almost 70% are expecting an increase in 2016. Ontario, very similar, with 50% seeing an increase last year and nearly 70% expecting an increase in 16. Alberta, however, very different. Over 50% saw a decrease last year, and only 35% are expecting an improvement in 2016, which we know will convert to less than that in reality. If we take a very quick look at an industry perspective here, and I'm not going to talk through all of these are in the guide, but the most positive sectors we're seeing are banking and financial services, IT and telecoms, and also pharmaceuticals, with between 66% and 81% of employers in these sectors expecting business to increase next year. The most negative, perhaps not surprisingly, were oil and gas and resources and mining, with 37% and 25% respectively expecting business to reduce in 2016. As I said, we look at 16 different industry sectors in the report, so this is just a selection, more to have a look at in the guide. We also wanted to get a view on the whole oil and gas question, and decided the best way to do this was just simply to ask. So we asked whether, as a result of the oil and gas downturn, do you plan to slow or delay projects or business activity levels in the upcoming 6 to 12 months? We had only 20% of respondents said yes, and I would suggest most of these were from Alberta. So the vast majority of employers are actually saying that they're unaffected. We also asked them what they felt would be the best performing industry sectors in the coming year, and banking and IT came out on top, which matches up with what we saw on the previous slide. Now looking at recruitment plans, looking at permanent headcount plans first. For the last 3 years, the expectations and reality have actually been remarkably similar. Generally speaking, people tend to be optimistic at the start of the year, so there's always some sort of gap between expectation and reality. In 2016, we've got slightly more people saying they plan to hold steady than in 2015, with over 50% saying that, and 35% saying they expect to increase permanent headcount. So it's still a pretty healthy number and very similar to previous years. Overall, it's very consistent. It is fairly conservative, but bear in mind that we saw confidence levels dropping, so it'll be interesting this time next year to see if expectations are actually met. Then, taking a look at the accounting and finance results, employers have very similar expectations for next year as they had to 2015. But if we look at the 2015 results, you can see that more than half expected to maintain headcount. However, that number that actually maintained headcount was 15% fewer. So looking ahead to 2016, we can see that about a third expect to increase permanent headcount, with the majority expecting to keep it steady. What about the variances by region on hiring plan? And again, if we look at BC and Ontario first, we have a pretty impressive level of consistency. In BC, around 40% growing and 40% staying the same every year for the last 3 years. Expectations for 2016 are slightly higher on both growth and staying the same, and lower on reducing headcount. But my guess would be that by the time the year is done, we'll see virtually the same as in previous years. We've got a similar pattern in Ontario, slightly more conservative than BC in past years, but the same level of consistency for 3 years in a row. We have 45% holding steady, 35% growing. Expectations for 2016, well, for the same reasons as I mentioned, 2016 looks like it will end up being virtually the same. Then it's an about turn for Alberta, and that looks set to continue. You've got almost 50% who saw a reduction in permanent headcount in 2015, and 55% expecting the same again in 2016. I think what actually happens in Alberta probably depends on what happens to the price of oil, so we'll see how that develops. Then looking at the same point but broken down by industry sector again, we can see that banking, IT and pharma have the most aggressive hiring plans, but it's worth highlighting that despite the fact that we're talking numbers of 60 to 80% of companies expecting to be busier in terms of activity next year, only 40 to 45% say they plan to grow permanent headcount. So they're obviously looking for improved productivity as opposed to investing. Again, natural resources-based industries are the most conservative, with oil and gas and resources and mining with 35 and 40% respectively, expecting to reduce their perm headcount. Looking at temporary hiring plans, and really this looks like things will remain the same as previous years. We have the vast majority of companies, over 60%, saying that they will hold use of temporary or contract headcount steady, and around 20% are planning on accelerating. Again, looking at accounting and finance employers, we look to have the same expectations for temporary staff use next year as they've had for the last few years. Now we move to skill shortage and the impact that that's having on business success. The topic of skill shortage has largely gone out of the media in the last 6 to 12 months, and this is probably because of the attention on the oil patch jobs market in particular, and perhaps because of there being a general cooling in the economy, as mentioned already. However, the problem hasn't gone away, it's just keeping a lower profile. Our view is that there is a clear shortage of highly skilled people in specific areas, and if you talked to an employer in the technology sector, for example, and tried telling them there wasn't a shortage of mobile web developers, then they would probably disagree with you. At the same time, there is clearly a challenge to find work if you are unskilled or at entry level. Both these facts are true, and both are very different situations. In any event, we asked whether Canada suffers from a skill shortage, and 53% of accounting and finance respondents believe this would be true. It was 61% for the economy overall. We then asked whether your own industry is affected by a skill shortage, and 60% believe this to be the case. This is an interesting, consistent pattern where respondents tell us the skill shortage in their own industry or function is worse than the skill shortage overall. We also asked what you think are the main reasons contributing to the skill shortage in your industry. And by far and away the biggest reasons, at 37% and 23% respectively, were a lack of training and professional development and a lack of people entering industry. All the same as last year, unsurprisingly, but it means that the problem isn't going away. The lack of skilled candidates has an effect on organisations, and we wanted to find out more about this and specifically the effect that it was having. We had 31% of employers saying the skill shortage was affecting their business activity levels or holding them back from growing. How is it affecting business activity? 37% said it was affecting productivity directly. This is interesting because on the one hand you have employers trying to improve productivity by not adding to permanent headcount, and at the same time saying that productivity is being negatively affected by not being able to hire the right people, and therein lies the skills gap. There's a clear gap between the skills that are required and the people that are available. And what effect is the skills shortage having with the companies and on existing staff? Around 25% said it's causing increased stress levels. Just under 30% saying they're seeing reduced levels of office morale, and then a dominant proportion, and growing over last year, almost 60% say this is causing general inefficiencies in their organisation as a result. The point here is that companies are trying to do more with the same people, and whilst there is an attractive financial business case for doing this, it does also come with a health warning. Your plans to keep up with your expectations could be impeded by not attracting the right people and also losing some of your more valuable people. So, what are employers doing to respond to this? Two of the most popular remedies were still, as previous years, changing processes and organisational structure. But more accounting and finance professionals are relying on internal training. And this is great to see because that's what we suggested last year, so some companies are clearly following through. The next most popular response is using temporary or contract staff, with more than 30% of employers doing that, although fewer than last year. However, a sustainable business requires development and promotion of staff, but there are only around 11% of accounting and finance employers using succession as a solution to the skill shortage. And I'm going to come back to that topic of succession plans in just a moment. We also asked what level of pressure employers felt their people were under due to a shortage of skills in certain areas. And 40% said their staff were under high to extremely high pressure because they've not been able to find the right people. Finally, how can you do a better job at attracting the very niche and hard to find skill sets? We asked, how are you making your company attractive to top talent? Well, accounting and finance employers saying offering competitive salaries was the number one, followed by promoting company culture, and in third spot is offering competitive benefits package. The least popular tactic when it comes to attraction is promoting career progression. We also asked what were the biggest contributing factors to losing people, and the number one factor was, interestingly enough, career progression. Salary levels are a major factor here too, but there is a clear gap between salary and career expectations. Add to this the fact that 71% of employers say they don't have a succession plan. We know for a fact that people want a career progression, and quite often this isn't even to do with compensation. It's largely to do with learning new things and having new challenges. Our advice is to figure out how you can challenge the best people in your team and also promote the idea that career progression is available in your company. We get asked, how do I promote my succession plan as it's confidential? And that's a really good point. You don't publish the succession plan that shows exactly who is going to get each role in future, but you publish the career path that people could follow if they're successful and they have the ambition. Now we're going to take a few minutes looking at skills in demand, specifically in accounting and finance. On a national level, with the first round of the new Chartered Professional Accountant CPA coming through since the unification of the accounting designations, employer expectations are changing, and some are looking for those with recent designations rather than those that are grandfathering them into the CPA. Also nationally, looking at financial services, OSFI has made revisions which have impacted hiring patterns in niche areas of risk management and compliance. As OSFI expects the financial sector to increase monitoring and governance over external threats, there's been a spike in demand for operational risk candidates who have exposure to information risk, disaster recovery and business continuity planning. These hiring needs will be greater for small to mid-sized banks whose risk and compliance teams are more focused on credit risk. There is also steady growth in commercial and corporate lending, which will result in a continued need for candidates specialised in regulatory compliance, AML, credit risk and market risk. And now looking at skills in demand Provincially, starting with BC, we're seeing a growing construction and property market, which has been balanced by the continued downturn in mining. The economy has been buoyed by a resurgence in manufacturing, and we're also experiencing demand in the forestry industry for qualified accounting staff at all levels, from AP clerks to CFO level. Senior financial analysts are proving their worth as businesses are demanding accurate budgeting and forecasting to either maximise their growth or create the most efficient environment when times are challenging. And lastly, in both public practice firms as well as industry, there's been an increase in demand for strong US tax managers. In Alberta, the commodities market has created a mixed outlook as resources-based employers have to choose between maintaining staff or doing more with fewer staff. In professional services, the demand amongst firms remains high, particularly in the area of tax, audit and advisory work, indicating more work is being outsourced as resource-based employers are seeking to reduce fixed cost. The financial services sector is also hired strategically to ensure they are positioned well for when the recovery occurs. Accountants with experience in property management are in short supply, and the need within commercial and infrastructure construction remains strong. So those with solid construction project accounting experience will find themselves in demand. In Ontario, we're also seeing that the real estate market has continued to be buoyant, with residential construction continuing to be a busy area for recruitment, partly driven by low interest rates and the fact that home ownership continues to be viewed as a sound investment in an otherwise volatile market. The demand for project accounting skills, again, has been particularly high from accountants through to controllership level roles. The property management sector has also continued to be an active space, driven by the steady development of commercial and retail spaces in the province. As in other provinces, companies continue to focus on finding greater efficiencies and improved decision-making, which has kept the demand for financial analysts high, especially for those with strong soft skills, able to act as true business partners to the operational teams they support. Having tight controls in place and remaining compliant also remains a top priority, even for the smaller private organisations with a continued need for audit and risk professionals. And then we have the Montreal market, where the manufacturing industry has seen a growth of activity due to the low Canadian dollar. This has opened up a market for cost accountants with consumer goods and retail experience. Again, construction property development has continued to rise within Montreal, and there's been growing pressure to find experienced property and project accountants with significant experience, and therefore creating a slight rise in salary for these positions. Similar to BC, we're seeing a growth of US-based activity in Canada. Public accounting firms are competing for candidates with commodity tax experience and also US tax experience. I'm now going to look at the key challenges companies are finding recruiting and the negative impact that it's having on some businesses. We've asked this question for the last 3 years. What are the main challenges your recruitment plans face for the coming year? The first 2 years, the key challenges were a skill shortage, which makes total sense, and increasing salary levels. But at the same time, we've also seen an increase in profile and reputation becoming more significant. Then, when we asked the question for 2016, things seem to have followed this trend and actually changed the balance in terms of the biggest challenges that employers are facing. So we've got over 50% of employers still say that skill shortages and salary levels are a challenge, but we now see that company reputation and level of company profile are actually exceeding those as challenges for companies recruiting. In other words, we're having problems hiring because we don't have a high enough profile or awareness amongst the pool of candidates that we're targeting. So we might ask why this would be a problem and not so much in the past. Well, our view is that employers are becoming more aware of the noise that's out there in the media in general, whether it's news, sports, social media, networking, proliferation of job boards. There's lots of noise out there in the digital world, so how do I make myself heard? The fact that companies are even thinking about this means that progress has been made. They are aware that it's a problem. Now they need to fix it. And that's a topic that we could spend a lot more time talking about. If you do want to talk to us about how you develop your brand profile, then please drop me an email and we'd be more than happy to have a chat with you about it. We also asked how companies are attracting new people or new entries to their industry and organisation. We asked what you felt was the main reason for fewer people entering your industry. I'm just going to pull out a few answers that I feel are connected here. So we've got about 30% saying that there's a lack of awareness at school or at college about career opportunities in different industries. And then you've got 22% saying that the problem is the perception people have of that industry or the stereotype that the industry carries. In my mind, this is actually the same thing: profile, awareness, communication of the correct message. We asked then who was responsible for sorting this out, and 40% said the responsibility lies with the employees themselves, which I feel is actually very encouraging. It's much better than saying this is just somebody else's problem. How do you raise the profile of your organisation? Well, we had in Ontario Manufacturing Association last year, we got a group of employers together and decided to raise the industry's profile through schools, colleges, online messaging collectively. It's a lot of work, but it's definitely worth it. Increasing awareness is a medium to long-term strategy to solve your recruitment plans, but as we just saw, it's an essential element of it. That means you have to be able to work in advance and build that awareness over time, so when the time is right, you start hiring. Certainly that's easier said than done, and it's hard to make a decision to invest time for 6 months to a year building awareness when resource is scarce. That's a fair point, but when you look at the fact that it takes 2 to 6 months to fill a niche job role, then perhaps the time would be well invested up front. Add to this the fact that the economy didn't move forward last year. We've got 25% saying it's harder to recruit now than compared to a year ago. We also asked what your biggest obstacles to improving your hiring processes were, and 67% said that it was simply a lack of internal resources. And this rings true from what we hear every day from our clients. Sourcing the key skill sets is hard due to a lack of resource in the organisation. And I'll leave this topic with the thought that 50% of employers say they experience large to extremely large amounts of pressure on their workload when recruiting. Another reason or argument to invest in a long-term recruitment strategy. Again, we're more than happy to talk to people offline about this if they're interested. So how is this all affecting salary levels? We asked each year how much salaries were increased by the previous year, and we've shown this from 2012 along with the plans for 2016. The trend here is quite simple. More and more we see a move towards less than 3% increases in salary, with 70% of companies planning on offering that for 2016. Increases of more than 3% are becoming rare, at around 25% of companies doing that. If employers are expecting business levels to increase and not planning on adding more people, then why is there a trend to more conservative salary increases? Well, the answer is we see optimism in the economy. However, it's cautious optimism, and people look like they're hedging their bets. This optimism, therefore, isn't necessarily translating into investment. We can also see the accounting and finance expectations. They're very similar to the overall pattern, with the same trend towards salary increases of less than 3%. If we then take a look by industry, we have a whole range of industries printed in the guide. I've just picked a few out here to highlight, and certainly property management and facilities management are the most confident of the bunch, with around 30% offering more than 3%, and unsurprisingly, resources and mining being the most conservative, where you've got around 28% receiving no salary increase at all. Then, if we take a look at how this varies by functional area within the company, based on this, the function area that will be the most fiscally prudent this year is procurement. That kind of makes sense in terms of practicing what you preach. With 74% saying they will offer a less than 3% increase in procurement. Office professional admin come in the next highest, the most extreme rather, with 36% getting an increase of more than 3%. We then have accountancy and finance professionals with 29% getting an increase of over 3%, 26% of IT departments, followed by 24% of HR departments offering the raise over 3%. In addition to asking the set percentage increase companies are expected to pay, we also asked whether they would alter their plans to get the best talent in the market. In reality, this might mean that companies won't give an increase in most areas, but are prepared to do so to attract niche skills or senior talent. Just over 10% had already done so, and we also had another 50% saying they would consider it. We also asked where you were feeling the most wage pressure, and this is at the mid to senior management level, with 60% saying they were feeling some to excessive pressure. Anyway, if this is the case, then it makes sense to treat niche skill sets, top talent, and certain management roles separately when it comes to figuring out what to do with salary levels. Just a final point on this topic, we have 69% of employees saying that they expect to receive a salary increase in 2016. And we had last year 64% of A&F employees having received a pay increase in the last 12 months. So that seems to stack up. I'm going to have a brief word here on benefits, but again, there is a lot more information in the guide. Within most sectors, flexible working and the ability to work from home are coming out on top of the list. The one exception is in construction, where the top benefit is performance-related pay, followed by pension matching. So to finish off, key findings and recommendations from this year's salary guide. In terms of key findings, we see that confidence in the economy is tempered. We have employers in regions outside of Alberta that are still pretty optimistic about future business activity. And this is converting into steady year-on-year hiring plans. We do see that there is pressure on existing staff getting worse, in part caused by skill shortages in specific areas. We're seeing salary increases of lower than 3%, but again, in skill short areas or in management roles, we are seeing employers willing to alter compensation to get the best talent. And then we see that recruitment is evolving, and employers are being faced by new challenges when it comes to recruiting the right people. So on to our recommendations. Our recommendations are that employers should be promoting their succession plan. They should be looking at attracting staff, but also retaining staff by demonstrating that they have a meaningful succession plan. Employers should look at building a talent pipeline today, even if they're not recruiting, and making sure that they've got the future talent that is available. They should be developing and broadcasting their employee value proposition, and also potentially looking at investing in the future by bringing in more junior staff to support their existing workforce. And also protect your current staff, protect your current assets through better engagement, for example, communicating timelines for salary increases. So those are the key findings and the recommendations, and that is the end of the key messages we wanted to share with you today. So thank you very much. We really appreciate you dialing in and listening in, and I hope you found it useful and got some constructive ideas from it. We do now have a couple of minutes to spare to answer any questions that you have. If you have a question, please type it in the chat box, and we'll do our best to answer it. As I said, we have Alex and Shovik from our Accounting and Finance Division, and Thea Watson, our VP of Marketing, to help us out with the questions. As we're waiting for questions to come in, to request a copy of the full report, please go to hayes.ca/salary guide/salary guide, and we will also have a recording of this webinar available on our YouTube channel. So let's see what, if any, questions we have. Okay, we have first question we've got a question which is how do hiring plans for accountancy and finance professionals stack up against other professions? I think I'll give that question to Alex, if you'd like to give us your views on that.
Yeah, absolutely. I think we found that accounting and finance hiring plans are actually quite comparable to the overall average for 2016. There are different industries that have been affected in different ways. I mean, if you look at the construction and property management industries, for example, there's a very high demand for accounting and finance professionals, whilst particularly in Alberta, the natural resources industries are expecting to be very slow this year.
Great, okay. Another question we have here, which is connected with the question of employer brand and awareness that we talked about. So why do you think employers are becoming more concerned with having an employer brand and promoting their culture? And does it really matter to candidates? I'll take the first part of that question. So in terms of, I think we touched on it in the webinar, why employers are becoming more concerned about having an employer brand. And simply, there is more information out in the marketplace about companies, about jobs that are available. There are a lot more channels available to companies to promote themselves or otherwise. And so it's very important that companies do get noticed in the marketplace and they think about the brand that they have and how it's actually been seen by potential job seekers. On the second question, in terms of promoting their culture, The question was, does this really matter to candidates? And I think I'll give that to Shovik to see what his view on that is.
Yeah, in our experience, we've seen a lot of candidates, besides asking about, succession planning that we talked about, a lot of emphasis is put on what is the actual company culture. Is this something that they feel would be a good fit for themselves in terms of, providing with the right sort of working environment, and also something that's sustainable to them and their career. So yeah, definitely very, very key point.
Great. Okay, thanks for that, Shovik. We have another question here, which I'll probably give to Shovik as well, as banking and financial services is his particular area of expertise. So the question is, what positions do you foresee hiring in banking and financial services in 2016?
Yeah, well, most of the positions that what I'm seeing right now at this point of time within banking has been to on more of the entry level analyst, senior analyst, and junior manager side. This is primarily the case with some of the bigger banks as they keep trying to build that talent pipeline. On the other side, which is more the mid-sized banks, the hiring seems to be more on experienced managers or senior management, because they are definitely lacking more leadership on key expertise areas. I mean, again, this is information more related to risk management, compliance, and audit functions within banking.
Great. Okay, thanks for that, Shovik. Another question here. In this environment of less than 3% salary increases, do employers look negatively on candidates who are switching roles frequently to get a significant bump in remuneration? And our answer to that, I think, would be that employers are generally looking for a pretty stable career history. Employers value longevity in a role, loyalty, and a stable career path. And I think also employers, in our experience, if they understand that people are moving just for the money, then they will be slightly suspicious of people's motives. This links back to the question about employee brand and culture. Companies are always going to be much more interested in somebody who wants to join the company because it's the right place for them to work and that they have something to offer. If it comes down just to a dollar value, then employers are likely to look rather negatively on that, we would suggest. That's it for questions. I believe that's all we have on questions for the moment. So thank you very much for listening in. Thank you very much for those questions. If there are any more questions, my contact details are here. As I said, we'd be more than happy to take any more time to talk to people about the material that we've covered. But that's all we have time for today. So thank you very much for joining us today.